I am so excited for today's session. I'm so excited to talk about Bitcoin and put together some things that we've been working on for quite a while. I think you're going to really enjoy this session all morning. I've been going at it, and you can tell by the excitement. I am really, really, really happy. Before we get into it, by the way, this is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. Before we get into it, and this one is going to be really, 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 really good. Let's start off though with our current positioning to make sure that everyone continues to be out on the right side. We're starting with stocks. We have 4 stocks that we trade: TQQQ, NVIDIA, FNGU, and Tesla. We have selected long ago tech stocks that we continue to believe will continue to outpace the devaluation of the dollar, except that we have a massive edge around that beats buy and hold. There's lots of talk today about European stocks for the first time in how many years? Dare I say? No, I can't even say that. Anyway, and we are currently out on the sidelines throughout this whole correction in a position of power, waiting for the next opportunity to get back into the markets. Stocks. We are back on the buy side with Bitcoin and Ethereum, both currently in long positions. Let's take a deeper look over here. First of all, buy side boost. Those that are just trading on the buy side, obviously no leverage at all. There's no leverage needed when you're talking about these type of returns. It's more about continuing to be there with that discipline to follow your plan and execute, grind it out into that moment that you are all of a sudden pushing those trades that continue to run. We saw Bitcoin first entering the market over here, and then after it was up about 3.2% into profit, Ethereum entered. So what you did is you had 100% allocation into Bitcoin, and then you exited a third of that at that 3% profit and then entered into the Ethereum trade, currently minus 1.3. And then Solana continues out on the sidelines. It's getting close to potential exit, assuming that we get above the 0 line over here and that we see the ST1 filter trigger on. From Bitcoin and just zooming out, right? Bitcoin bull runs. How could you outperform Bitcoin buy and hold if you knew when the bottom was and if you knew when the top was? It's why we introduced Bitcoin bull runs. Now, of course, if you're trading, right, and if you're trading and you include any type of drawdown, whether it's 40%, 60%, and you give it a certain amount of time, you will absolutely destroy buy and hold. However, if you are able to say, okay, this is the bottom, right? The bottom of the bull market began here, and this is where it topped. This period trading, you're not gonna be able to outperform buy and hold, which is why we introduced the Bitcoin bull runs. And the Bitcoin bull runs absolutely do not only outperform buy and hold, but they also help you to know when to be in the market, when out, and on what side. Obviously, a significantly low, less than 20% profitable, way lower than their other models. Drawdown, though, since 2012, absolutely more than acceptable, as is overall return. Yesterday, I was working on, this is V2, right? And I've been working on V3 and just trying to see if we can make any improvements. And there is obviously a little bit of an improvement over here. The difference in trades, notice it's only a difference of 1 trade. Percent profitable only going up about 5%. But really, there's not too much of a difference between 2020 and today, which to me suggests that, yeah, okay, early on, this was able to catch a few different like trades, like adding that money management to it, whether it was moving stop to break even or locking in profits. That was definitely a little bit of an edge. And from 2020 till today, a little bit. But what this suggests to me, that number one, is that the current model that we have over here on V2 is absolutely exceptional. And that, yes, as we roll out V3, we'll be able to include this, which is just a little bit tighter. And V4, there was really not too much of an advantage over here. You could see the drawdown going down 1% over here. It takes more trades in and out. I think we're comfortable here on V3. Moving over to our 8-hour trades, where all of our candidates here, all of our highly valued candidates, whether it's BTC 101 buy side only, whether or not it's the classic CTM 2.0, or it's BTC 108 and 107 on V2X, they all took the same entry. They're all in the market currently long, and we're hoping for some follow through. We'll take a discretionary look at that in a moment. Ethereum in the center view here is CTM 2.x on Ethereum. It currently is in that buy trade over here. And on the right side, we have the Bitcoin bull market run model that we were just looking at, because we know that when that's not in a trade, we have the ST2 filter toggled on. So that's currently the situation that we're in. We continue to monitor that. Cardano out on the sidelines, and so is Solana. So I want to really get into what I want to share with you this morning. So as far as that's the positionings across stocks and Bitcoin and crypto. And before we get into some of the improvements that we've been working on V3, I will do that afterwards. That way we could just take a look, and then we'll get into that dense portion, that putting the work in a little bit further into the session. Right now, I want to go ahead and take a look at Bitcoin and potentially some estimates here that are really, really off. So before we do that, let me just jump over and say that we saw surprisingly very little inflows into the spot ETFs yesterday. Very little inflows considering, Bitcoin having a very, very nice green day yesterday. We continue to watch Bitcoin from a discretionary standpoint as it's in this channel. Remember, the longer that it's in this channel, the better and more sustainable the long-term move will be. I'll show you a little later on a deeper perspective of that. But if at any point we break down from this trend line over here, that would suggest that, a quick move likely into this horizontal area pocket of support. And if that didn't hold, the correction could go obviously deeper and longer lasting. Same thing on the upside. Anytime we break that to the upside, that would suggest to me that likely what we're going to see, and you can see those that are astute, you can see the same line over here. So I could just put that up to there, and that might be the range that we come into, but we're far from that right now. I'm going to keep it where it is. And if we break out to the upside, you might see some quick and rapid price appreciation. That too would suggest that move might be pretty powerful, but soon thereafter, you likely see a deeper reversion to the mean. We want to stay within the channel as long as possible. From a simple discretionary look over here, we can see that we're into this area of resistance right now. We need to break outside of this trend line in order to have the opportunity to be testing back towards, what's this, 99,000. You got that psychological $100,000 number in there. Right now, we are in that downtrend. Ever since we broke over here, prior to price breaking this level, we were hoping that we didn't break, right? Obviously, this structural support over here. But if we did break, we said that, and this was about a 15% drawdown, we said the extent of the drawdown and the time it took to repair would be longer. We did then go ahead and take that 15% drawdown to a 30% drawdown. However, the recovery potentially is not going to be as long as lasting, potentially, right? We would have to break out here and then break above here and reclaim this to be much more neutral. Until then, we're defensive, right? I know that our models are finally long, but we're always early and at the turn of momentum. If the momentum's turning, we're going to catch it. And if not, this is still, to me, a downtrend that is coming into resistance. That could be potentially a little bear flaggy over here as we're into that resistance. So we're at an inflection point. This could go either way. And I think we'll talk about just the traditional markets over here last. So let's jump over to it. Let's get into the excitement, the fun. Greetings from Germany. Great morning, everyone. I hope you are doing well. So just a couple of observations as we continue to monitor Bitcoin through the lens of the 4-year cycle. It's just, for me, just an arbitrary marker of time, the 4 years of the halving event. Early on, the halving events had a dramatic effect on the price of Bitcoin, and then a little bit less, and then so far, a lot less. And also, this is the only time, the first time in Bitcoin's history, that price made an all-time high before the halving, not after the halving. Each and every other time, it was after the halving. And you could see the clear catalyst at that particular time in Bitcoin's life that the halving was. That's not the case today. I think and I hope that you all know and understand and realize it. Just one thing, a lot of people are looking for recession. And if there were a recession, Bitcoin is not immune, except that we're early in the cycle. We're right now into early 2025. Next halving is out to 2028. I believe, and I've been saying this for quite a long time, that my interpretation here is that what's going to happen is Bitcoin is going to peak a lot closer to the 2028 halving than it does over here in 2025 or to the 2024 halving. I remain very firm in that idea. A couple of other things just to point out for you. Most of the time, Bitcoin went ahead and you have this 0.786 retracement fib from the high to the low. It's a retracement fib. And then you have the 0.786 level. In the past, Bitcoin breaking above it sent that sharp price appreciation, that sharp price appreciation, that sharp price appreciation. Not this time at all. What we have is more like this. Over here, you had this brief period of consolidation. I say brief, but it's really, back then it wasn't that brief, and it was the longest one up until now. And that was roughly, let's call it 150 days. Currently, the consolidation has been going on a lot longer over here and going on for roughly more than double the amount of time. Now, my own perspective is that is super healthy and super powerful going forward. Okay. Now, again, and there's a great video I had pinned to the YouTube channel for about a year in 2024, and it talks about what would happen to Bitcoin if we were to see, well, for sure a global recession, but specifically a recession in the United States. Bitcoin is not immune. It's just that, again, we're very, very, very early in this current cycle, and monetary policy is not yet aligned. Rates are still relatively high off of their low, and we are still seeing quantitative tightening. Although finally reduced, it is still running. It is when monetary policy aligns that ultimately we will see the bull of all bull really beginning its run. Look at this area over here. Look how long we were in the pocket, right? We were just looking at that channel we're in. Look how long we were in that pocket. Look at this pocket right now. It's very long. The longer we stay in it, now we could break down. We just looked at that. And we could break up. And when you break up, you normally see that price appreciation and that volatility, right? This channel was very small. So was the move up. Do you see that? This was the small move up. Very small channel, break up, boom, that's it. This one is much, much longer. My expectation is this cycle is going to be much, much, much longer. It's not lengthening cycles. It's ultimate market opportunity. What does that mean? Let's take a look over here. This is a chart of Amazon, right? You could see Amazon going through a very similar nature over here. It had the hype cycle, right? Then the facing reality cycle. Was it going to make it? Is this internet thing for real? Amazon's losing money. Are they going to go bankrupt? And then boom, ultimate market opportunity. And then what happens over here? Boom. Now, could you imagine that you were watching Amazon back in this area over here and you were trying to predict what the price is going to be and you started using some linear regression model? What would that look like for you? It's pretty interesting that what happened to the price of Amazon actually is that not only when it made it out of the ultimate market opportunity, but then it started rising towards the top end of its structure over here. We're going to come back to Amazon's structure in just a moment. And I just want you to see very clearly how, look at this. This is resistance, support, resistance, support, 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 support. Amazon has this structure that starts in its hype phase and continues out until today. Very important over here. Here's Bitcoin. And this is Bitcoin. And you could see that it also has structure. And its structure is very apparent from 2013 here to today. But even if I go back further, it's just that in the hype phase, it's obviously a little bit more whatever. But Bitcoin also has this structure that it just continues to trade in. You might have saw it earlier on when we were looking at this over here. Let me just go ahead and really quick try to find it right over here when we were looking at the structure of Bitcoin. And what's amazing about this, and I've pointed this one out so many times, but I think it's just really cool. This is the current low. Look at the structure, right? I love this. Look at the highs over here. This is the March and April 2021 top. Look at the structure. This is the October and November, right? And this structure, for whatever reason, just is it from the inception of Bitcoin is something that is in the market, right? I'm not that far into the matrix. I don't know why it's happened, right? How is this drawn? I drew it. So let me come back over here. I don't know how to answer that question. So you could see that structure, and here's that structure of Bitcoin, and here's where it gets a little wild, is that I could say that, well, ever since Bitcoin made it out of the hype phase, it has this, like, let's call it 60%. Here it says 59.31%. And basically this angle continues, and the price of Bitcoin has spent some time below it. And then ever since 2017, and what happened after 2017, that was really the cycle that put Bitcoin out on everyone's radar. And when Bitcoin hit $20,000, the adoption at that point really grew. But at that point, everyone was really skeptical of Bitcoin. You didn't see a ticker of Bitcoin on CNBC or anywhere else. Today, not too far in the future, right? After the last cycle, Bitcoin is here to stay. And finally, just now in this past year, we've seen Bitcoin undergo a tremendous jump in adoption. And we call it the jump of the chasm from the early adopters, which is all of you, into the early majority. And you can see at this point, we now have obviously spot ETFs. BlackRock is here, as is all of Wall Street. The institutions are here. And there's currently a bill in the United States of America floating about building a strategic Bitcoin reserve, right? Now, they already have the reserve established from all the Bitcoin they've confiscated, except at this point, they're talking about potentially increasing that stack one way or the other. We will find out. That could kick off something like nation state FOMO. And I'm just trying to talk here about where we are in the current stage of adoption. Before I continue, let me come over here. There we go. All right. Let me do this for you 1 second. This is what I talk about as far as that chasm, that jump we just made. That's the jump from, this is the hype phase. Remember Amazon in the hype phase? .com, pets.com, right? And then the burst, and then the facing reality. Is it going to make it out of here? And then Amazon hit that ultimate market opportunity, right? This is what we're just now beginning to enter into that ultimate market opportunity. And maybe I drew this line off. I drew this line over here somewhere in early 2022. So maybe I got the chasm a little wrong, and maybe it should have been pointed out towards, I don't know, right around the time that the spot ETFs were introduced, or more appropriately, probably at the time that Grayscale GBTC won the court case, allowing them to roll their fund into a spot ETF right around there. Either which way, pretty good from afar. And we're talking from afar right now. So let me just come back over here. And this is wild. First, I want you to notice that what happens here with Amazon, and just because it happened in Amazon doesn't mean it's going to happen in Bitcoin. But what did happen here is that as it entered that ultimate market opportunity, and then as it like, boom, was like really established, it started moving up towards the upper structure, the upper third or upper quarter, I could say, of its structure. That structure that's been apparent throughout its history. Now, a lot of people, they talk about the decay that's happening on Bitcoin's volatility, diminishing returns. And of course, if you were looking at Amazon during the facing reality stage, you would think that, oh, that's diminishing returns. You're not going to see that type of aggressive growth occur ever again, right? And then bring out the linear regression models, and then you have a lot of people putting expectations on Bitcoin that probably are not realistic if you look at the adoption that's taking place. Now, this is all dependent upon adoption. If you were to see, just think for a second what that looks like in the last year or since October. The previous administration in the United States of America was not Bitcoin friendly. The SEC, right, was not crypto friendly. And now just fast forward a couple of months, and it's almost like a 360-degree move. The former SEC chairman gone. The current administration, extraordinarily friendly towards Bitcoin and crypto, wanted to make it like it's night and day, as well as just obviously the institutions are here. Wall Street's here. Now, there are some people who are like, well, that changes Bitcoin, and I don't like that. It doesn't matter. Bitcoin's an open protocol. What did you think was going to happen, right? Now, there's different ways and there's always been from day one potential attacks that could have occurred and things to worry about. And of course, these new type of players bring in new types of potential. Run your own node. You vote for the protocol. But right now, that's not what we're talking about. Let's talk about this. I want to go ahead and take this area over here, and I'm going to take this Bitcoin. This is this structure that we've been looking at Bitcoin for a long time, and the degree and angle. And by the way, if I had to guess what would happen if I come out to like 2029, right? And right here in October of 2029, I see that says 500,000 Bitcoin. And I think that's a very good and conservative estimate. Of course, dependent on the continued adoption of Bitcoin, but Bitcoin's adoption continues to accelerate. It's not diminishing. Always watch the hash rate. Always watch the adoption. It could not be any clearer of the magnitude of the adoption of Bitcoin. And we're not talking anymore about retail and the number of wallets. We're talking about the amount of money that is flowing into Bitcoin and continuing to do so. Now, ever since 2017, where Bitcoin got on the world's radar, and then I would say 2020, where it was established, there's been a few periods we've come back towards that line and traded under it briefly, but it's been a very good baseline. And I think that is a low baseline that we could look at. Most of the time since 2017, it's been above that line, and you can see the orange line over here, and you could go back and we'll just look at into October, and that's $1 million Bitcoin. I think that's an okay estimate, but I think that we might be able to do better. Let's take a look together and see what we mean. 360-degree move. What did I mean? Yes, I meant 180 degrees. 360 would be right back where we started. 180 degrees, a complete about face, and it's very clear to everyone. So this is the structure that we put on Amazon a while ago here at CTM. I don't remember when, but it was well over 6, 7, 8 months ago, maybe even longer. And this morning, I just took a look at it and went like this, because I'm trying to figure out here, right? As the ultimate market opportunity and what happens into the future and taking a look. And I just went ahead and I basically just pasted that onto here. And then this is quite fun. Like, do you see that they have almost the identical structure? That's pretty wild. Pretty wild that they have the identical, almost identical structure of the two. And if you go ahead and I'll get it in a second. There we go. I'm overlaying here that Amazon. Sorry, I looked at so many things this morning, and I'm going to catch up to you. Hold on, I don't like that. Let me come back over here then. We'll start over here, then we'll go back to that. So I'm just we've established that their structure is almost identical. The periods of the hype phase, facing reality, and ultimate market opportunity, they line up, as do all assets that are undergoing S-curve adoption. Now, you'll hear a lot of people out there who really embrace the decay of Bitcoin's volatility, how it's acting in a linear regression, even the power law. The power law has a very good floor. It's going to break to the upside, because that's just simply not how these things work. Now, let's go ahead and just take a look at where potentially, if we were to see a similar behavior, I'll come back to that last one in a second. But if we have a similar behavior, I need to come back to that last one to show you, right? So we were looking at 2019, and is 2 million in 2029 a pretty good estimate of what we think is going to happen? Let me go ahead and show you. See, I like the other one better. You're going to have to bear with me. I thought it was going to be a very smooth presentation, but whatever. This is where we are. Let me go ahead and from this angle over here, in Amazon or on Amazon, you could see that we came towards the top quarter, right? So let's say that we come back towards the top third as a comfortable marker on Bitcoin, as what we think may happen indeed. So let's use this as the top of the structure over here. And then over here would be the quarter. And this line over here, right? I'll highlight it. There we go. That's just below that line, I would say, is about a third. I'm going to come back into the 2029, and I'll come to the bottom line below it. That's 2 million, 2.7. I would say trying to be a little realistic, that 2 million Bitcoin in 2029, that aligns from where I project the path of Bitcoin as it's going to follow as far as its adoption. And let me just go back over here, and I wanted to show you one more. I really wanted to line this up how I had it before going live with you. So maybe if I push this back. Can't do it, y'all. There we go. So I don't really know how to line these up when I was looking here this morning. Like, this is from the top of the hype phase. This is lining them up. I should make this a little bit darker for you. I'm gonna get it, yeah. There we go. There we go. And lining them up from where they are right now and in the ultimate market opportunity, you could see that they've established a channel that, you know, for the last couple of years, for the last 2 years, have definitely mirrored the trajectory. This is my expectation of what we're going to see over here. This is where I think that we're going forward. I don't think that we're not bullish enough. And I think that the reason, well, I think there's 2 reasons why people's expectations potentially are out of line. And, you know, I think it's fair to say that a lot of people give the estimation of 1 million Bitcoin by 2030. And I think that's fair. And I think it's good to set projections that you think are going to be hit. And we looked at our baseline, and if the baseline where ever since 2017 prices spent roughly 95% of the line above that line, that will hit 1 million. But that's not how this should actually play out. And I think that there's a big discrepancy between 1 million in 2030 and 2 million in 2029. We'll call it January 2030, whatever you want. I think that's a big difference as far as expectation. And I think that we want to look at this. And I think a lot of the 2020 cycle, where you saw that massively diminishing returns, as is expected during a facing reality stage over here. Like, if this is one cycle and the next cycle, you know, but this is facing reality. Is it going to make it out of there? And then after 2010, when, you know, sure enough, the internet flew and took off, boom, cloud computing, boom. So yeah, I think that a lot of people, because of what happened in the 2021, the 2020 cycle, that it's really kind of like that had a huge effect on people's expectations. And then, of course, you've heard about, which is correct up until now, right? Throughout facing reality, you heard about diminishing returns, and there are diminishing returns, except now that path of returns becomes more exponential going forward and upward to the right. Doesn't mean we're not going to be without drawdown. And you've seen a pattern. You saw 85% drawdown, 84% drawdown, and then 76. Last bear market, even with the implosion of FTX, and had that not happened, likely the drawdown would have been significantly less. It would have been significantly less. It looked like Bitcoin was trying to put in a bottom, not at 17,000, but right around 20,000. But it happened. And the path forward is uncertain. We don't know that the continued pace of adoption will continue. It certainly looks stronger than ever. We don't know that there will not be a major recession. And I'm not talking about like April 2020, a recession that lasted a blink of an eye, and then like boom, why the Fed was in like max outright easing. I'm talking about a lasting recession that's very hard to spur growth out of. You could look at what's happening in China over the last couple of years as an example. You could look at what happened to the US in 2008 as an example. And we'll see TM, but well, Jay Cora, unquestionably, from both accounts, whether you look at Bitcoin bull runs or you look at the trading, because when you're talking between now and the next 5 years, there's going to be periods of drawdown. Like, you're not going to see price go. And look at Amazon, just so you know, right? And you could just take a look over here, and you could say during this facing reality stage, there we go, 30% drawdown. Now, I happen to think that Bitcoin is more volatile than Amazon, even at this stage, right over here. And you could see multiple, there's a 40% drawdown recently. Sorry, 60%, but we're not into that area. And all these drawdowns, Now, assuming they're 30%, you just saw over here for some Bitcoin drawdown 30%. Pretty close. Amazon drawing down 20%. Bitcoin drawing down 30%. They're pretty close now. This is again a 30% drawdown in Bitcoin here at 24%. So at this point they are pretty close over here. But there will be multiple drawdowns over here, and that compounding over effect of years will absolutely crush it. And as you could see and know, that the Bitcoin bull runs, even if price was up to the right, will outperform buy and hold. So now, there's nothing wrong with a basic strategy like dollar cost average. It is assuming, though, one important thing. It's assuming that price ultimately ends up to the right, up and to the right. Sorry, it's going to the right no matter what. Whether or not it goes sideways, crashes, or goes up, no one knows. But buy and hold dollar cost average strategy assumes that ultimately that things end up well. And you never know that. You never know what's going to happen. And a lot of people talk about, well, what's the attack vector for Bitcoin today? And without getting into the real attack vectors, what would happen if the US did get its house in order? What would happen if the US were to substantially pay down its debt? What happens if it were to, through the use of the continued growth of stable coins, stabilize its treasury market? Is there going to be an outflow of the treasury market into Bitcoin if the treasury market is super solid and stable, right? Because it's not just the adoption. Our thesis on Bitcoin is the continued devaluation of the underlying of fiat. Now, I think that continues, but you never know, and we do not know. I never expected 2 years ago that Tether would be one of the top 10 holders of U.S. Treasuries and growing, or that today the President of the United States would be launching a stable coin that is looking to be backed also by Treasuries, right? Therefore, continuing that bid into Treasuries. A lot of things continue to change, and kind of the main factor of Bitcoin's upside is its continued adoption and the devaluation of the currency. And both those things I think will absolutely continue, but you never know. Now, let me know the interesting portion of that you enjoyed from that. And I just want to come back over here and just talk about a little of the work that I've been doing over here. This is Grayscale, right? And we're looking at Grayscale because it has more data, right? I should have cleaned this up, but I've been building. This is a template we've had over here for a long time, 2022. And this is from 2020 to today on Bitcoin, right? Buy and hold. Come on. Look, 23% drawdown. Obviously, the percent profitable here is that. Hold on, let me get rid of that. Yep. Is very attractive. This is in relation to those who continue following. We looked at modeling because the whole idea is trying to put together a model for the spot ETFs. Now, if you're focused on IBIT, right, BlackRock's spot ETF, and a lot of us would like a way to access that. We can't use our Bitcoin models that are meant for Bitcoin trading 24/7 because IBIT and the other spot ETFs, they only trade Monday through Friday. They don't trade overnight. It's different. So I don't know. I think MicroStrategy is a very leveraged play, which means that when Bitcoin is going up and to the right on takeoff, that we see some sharp appreciation. And when Bitcoin goes into drawdown, as we've seen, a 30% in Bitcoin was what? Like a 60% drawdown on MicroStrategy. I don't know. I don't know. I think MicroStrategy is a very complex, risky play that is getting more exotic by the week, and I really don't have too much of a comment on that. But if MicroStrategy were like Michael Saylor says that like he's never selling. I mean, he could be forced to sell Bitcoin in the future. Not him, maybe personally. So maybe when he says that, he's talking about him himself. So let's talk about MicroStrategy. There could come a point in time where MicroStrategy is forced to sell Bitcoin or wants to sell Bitcoin. And when that happens, hopefully the market is big enough to absorb it. There were lots of worries throughout Bitcoin's history about what would happen when the Mt. Gox people were given back their Bitcoin, and it was just like when it happened, the market was able to absorb it without even thinking about it. The market was able to absorb very recently the just complete reckless selling by Germany. The market likely will be able to absorb it if and when it were to occur. That's not really a concern. And again, this is coming back. How many times did I tell you in 2020? I'm like, Tether's not a risk. Tether's not a concern. The risk to Bitcoin's bull market, I said, is not Tether. It's the Federal Reserve and their monetary policy. No one believed me. Not until we saw in October 2021, the Federal Reserve says we're going to start tapering down our QE. I said that we're going to see a rate shock, and Bitcoin is not immune. What happened? Fed policy put the top in the Bitcoin market, and we went down for a 76% drawdown. That currently is what the continued risk to Bitcoin and the markets is of course central banks around the world, but specifically the Federal Reserve. Now the U.S. anyway, this is not a macro session, but I'll say that it's more along the lines of monetary policy that affects Bitcoin. So I was looking at whether or not we can make some improvements on V3, V4, right? And so the drawdown here is a little less. Look at the percent profitable though. I don't like this. So I'm looking at 40 trades, 47% win rate, 23% drawdown versus a 27% win rate. Now the drawdown's more attractive. The return is not there. I think more work needs to be done. On V4, I could rule it out. I don't see any room for improvement or progress on there, right? Just wanted to make that with you knowing. Yeah, I need more work on this. And maybe just the current model that we have will ultimately provide to be better. But I'm going to keep going on there. Obviously, these are our V3 templates soon to be released. This is Bitcoin since, hold on one second, let me find out where we are. Since 2024, less than 10% drawdown, 165%. Since 2023, 728%, again, 10% drawdown. What about since the bear market, right? From the top, 2022, right? 2,100%, 15% drawdown. And let's just give a good marker. For the last 5 years, that's ridiculous, right? And the drawdown, right? We come all the way down to 2014. It maintains over here with a max drawdown of set less than 18%, right? So we're getting close to the rollout over here. What I did yesterday, including with the BTC bull runs, which I showed you already on V3, with the IBIT on more along lines of trading, and then we have to compare the two to find out which has the edge. Do we want the bull runs for the spot ETFs or that trading on the daily? I'm not exactly sure. And then I was just taking a look, Hypernova, are you here? At the buy side only And you can see the difference here. This is from 2020 till today versus, let me just come back to show you if I were to take off the buy and sell over here. So we're looking at 14% drawdown, 3,400%. I mean, they're very close. I'm continuing to work out to see if we could find a better model for just buy side only. If not, our current model is absolutely spectacular from 2014 buy side only. See that drawdown? That drawdown under 50%, right? Buy side alone is enough to get it done. So that's where we are right now. A lot of work being done each and every day. Today was a nice little interlude to not only focus on what it takes to maintain that focus, that discipline. From what I've seen over the years, the most people that wind up making the mistake they make is not following their plan. They try taking shortcuts, try trading discretionary. Ryan, I want to get into, and I still have up on my computer, right? When the question, this is such an important question, but I haven't addressed it yet, right? Would I recommend traders with a systematic approach to eventually start discretionary trading? It's a very, like, I'm going to address that. It's just very, very difficult because why the opportunity is immense. Most people would be better off focused on the systematic approach, having that well-defined edge that is basically unmatched and giving everything to making sure that that is what they execute on. Most people give back the money they make from their systematic trade discretionary. Now you could be that 1 or 2%, but not likely. So we'll get into that at the right time. My response is going to be thoughtful. So and to set the most people up for success, not and that's the important piece. So I love today's session. I was blown away that Amazon had that same exact structure or very close to Bitcoin. That was pretty insane, pretty cool. There we go. All right, everyone. Have a beautiful day. God bless you. I'll see you all back on the inside.